fall into the trap with. I'm sure a few of you have FOMO'd buying the dip so far in the markets and not done so with a longer term strategy. Let's move over to the indices. We've got IWM to start off with here. We've talked about the Wyckoff distribution. Now, I had some questions that were coming in. They were like, Tom, does Wyckoff distribution mean to the short side? Yes. So this is effectively Wyckoff distribution. We have our max pain breakout here and obviously the break underneath. The problem with this is that if we do get rallies, let's say we rally to a 210, 209 area, what do we expect to happen here for IWM, the small caps? We expect sellers to come in. So we don't think that we're going to just get this V-shaped style recovery where it just goes all the way back up to the peak. And that's because this is the real deal, this type of pattern. It's showing weakness in the small companies. We've seen that initially sell off. It has rallied a few times, but just remember there is still an expectation of potential new lows. So we're going to continuously watch IWM, the Russell, as closely as possible to get an idea of the real story in the smaller stocks in the economy here. High, low, long leg doji on this candle. I think it's better to jump over to the NASDAQ as it's showing very similar closure results. Long leg doji here, but the SPX shows the best. So we had the dead cat bounce rally. We've sold off bound down to the lows. Possibly we even sell further and test these lows ahead of the Fed. So the fear is real in the market. Obviously, Microsoft is kind of driving that. Sentiment is terrible. I haven't seen sentiment this bad from the retail community and just in general. I'm seeing people hedge portfolios fully. I'm seeing people that are, short dated or long dated hedges, seeing people selling their entire stock portfolios, seeing people make all sorts of crazy moves that maybe aren't thought out necessarily through the entire portfolio. Like a lot of people hedge some things, but they hedge it based on maybe this concept of, okay, I want to hedge it and buy more. I want to sell a portion or maybe just hedge a portion. These are across the board, big decisions that are being made here. So if we go down to these lows again ahead of the Fed, we know that it's pretty much all on the Fed to support the market. The price action is showing us fear is there. Let's just move over to the futures because you'll get a better idea of how low we've really gone after market. So here is our bullish hammer. We got no follow through, which realistically says that's a face ripper rally. That's a dead cat bounce. Nothing good happened from it. Then we get that sell off, which we certainly thought would occur because of the dead cat rally or the dead cat bounce. And then we come back down to support. It is not unheard of for us to do this. Again, we go through history. Previous huge supports, a retest occurred. Previous huge supports, a retest occurred. It bounced, it stayed within a range, and then it sold underneath that range back in. Remember, this is a common thing that happens with markets. They come back and retest the zone and then really clarify whether they want to. And whether you want to buy exactly here is up to you. But when you get these types of things like double bottoms, that becomes your clarity to go, okay, cool, we can trade this long. Okay, cool, we can make better informed decisions. It's all about getting that clarity. And you generally get that by being patient and not having the FOMO in the markets. These are huge levels. We know, of course, they're coming up to an important news announcement. We can see that 14,000 level. And even though it's slightly underneath that, that's still a big technical zone. And we'll be watching the NASDAQ very closely over the next 24 hours. The S&P 500, the daily close says it all. Indecision after huge rally. Bullish hammer, sure. No follow through, absolutely. We didn't get any. Daily 200 also acting as a bit of resistance here. So for buyers, you'd be really looking for it above this zone. The reason why is because that would show that the low's been tested. It would show this follow through and it's got it back above a very key moving average. Long leg doji, high, low, open, close, indecision. The market's telling us, hey, look, guys, we have no idea what's going on. We don't even know where we want to go next yet. But we'll give you clarity when we do. If we make a new low, it's on. I mean, could the low go all the way to 3,800? That's where we've kind of figured is the next big zone. And the reason why that is because it makes sense to most of these types of big bearish kind of bets that are being placed. 20% down. It's very possible underneath these lows. That's how important it becomes. We don't know that's going to happen. Let's get the clarity from the Fed, then we can start really figuring out the trading systems. The one thing we were sure of is once we got through the 20, we were going to go to the 50. That's very common, incredibly likely, high statistical chance. So it's all about picking your statistics and all about picking those levels. So at this stage, we're just waiting for that clarity. Let's move over to the futures just quickly to get a bit of an idea of how low it really has gone after hours, after the Microsoft report. We've come down, tested the 4,300, a lot of puts sitting on that zone, and we've found some buying pressure in the futures. So again, ahead of the Fed, we're going to get some type of clarity. Let's move over to the SPY. Long leg doji, as we know, we only bring up the SPY to get that 434 so we can have a look at the options, and the options are coming thick and fast for the Friday expiration. We've got 430, some puts being placed there. We've got the 420 strike, huge amounts of puts obviously being placed there, and then around that 400, a massive load of puts. So people are starting to place bearish bets. There was a lot of calls entered into the market today as well. It's starting to even up. It's not getting that much information from the options market, really. It's clearly divided between buyers and sellers, and everyone is confused about what they want to do next. We need that clarity, and the clarity is not showing itself quite yet on the markets, but we'll be here together when it does. Let's move over to Bitcoin. It's still looking much better than the rest of the markets. It held above 36,500. It's consolidating above this area. The crypto market's actually moving a little bit with the NASDAQ, and it's holding better than it was. It was falling with the NASDAQ. Now it's consolidated and it's holding around this zone. Be careful ahead of the Fed. Bitcoin and crypto will most likely move as well. It's not really the time to be necessarily trading this market. If you're investing and you've got a plan, fair enough. We have a high, we have a bullish hammer, we have a long leg doji forming here, and we know that high is around 37,620. So if that gets breached, next stop you would think is around 40,000 for Bitcoin, and a bullish kind of move. Something to watch over the next 24 hours. Similar to Ethereum, the rally has not been as strong as the Bitcoin rally, and this is across most of the altcoins. Everyone's going back to the king, or the big one, being Bitcoin, and people are starting to feel a little bit fearful on the rest of the coins. A lot of the rallies have not been as big. KSM, DOT, Matic, they're just not coming back as fast as you would expect. Let's move over to the calendar. FOMC statement, as we said, 2 p.m. here, 2:30 p.m. FOMC press conference. This is it. Let's find out what happens here. Tesla after the close, and then Apple on the Thursday session. So big news there. Just a quick bit of an announcement. I will unfortunately be away for the Wednesday and Thursday sessions. I'll still make a video after the Fed, but it will be done on the laptop. Do apologize for this. We'll be coming back with our normal shows all over the weekend. And of course, we'll be covering the market as much as we can over the next weeks and months. We'll be there with you every step of the way. Thanks so much for watching. Please subscribe, and of course, smash the like button if you enjoy our content. See you next time, and good luck out there. Hopefully, you can make the most of the opportunity that awaits at some point. See you soon, everybody. Bye for now.